Nearly 40% of trading days ended at new highs. So can the momentum possibly continue in Q2? Well, joining us now, Interactive Brokers Chief Strategist Steve Sosnick. Steve, great to have you. So investors have high hopes for earnings, high hopes for rate cuts. Is that a good or a bad thing for a month like April that's traditionally not too bad for stocks?
Hi, John. Thanks for having me. Yeah, I mean, there's a lot worse things than to go in being optimistic. We had a great quarter, both in performance, and last quarter's earnings were very solid for the most part. So there's reason to be optimistic. The trend is your friend, and this trend has been extraordinarily powerful. It's very tough to bet against. And so going into earnings season, which starts again in 2 weeks, whether we like it or not, we're pretty sanguine going in, but that sometimes can be a problem because if you go in too optimistically, then it's a higher bar to beat. So that'll be the thing to watch for as we build up into it in the next, 2.5 weeks or so.
So that's stocks. What about fixed income? If not many people think that we're going any higher, much less, much higher, just maybe that we'll stay here higher for longer, since it's not clear why the Fed would cut rates anytime soon.
Yeah, that's been one of my theses is at this point, why does the Fed need to cut rates? We've got a very solid economy. One of the things the market loved after the last FOMC meeting was the summary of economic projections being raised for GDP from 1.4 to 2.1%. Well, that's pretty solid. It's clear that there's plenty of money flowing into speculative investments, as we talk about here, on air all the time, and I talk about with clients. There's no shortage of those. There doesn't appear to be credit worries right now, with the possible exception of commercial real estate and some related products. So therefore, why does the Fed actually need to cut right now? And that is a question. Today, we did see, after the ISM numbers, which were very strong on manufacturing and new orders, but also very strong on inflation, there was definitely a fear that the Fed doesn't need to cut, and rate cut expectations briefly fell below 50% for June. We backed up to about 60-ish later in the day. But that question has to be in investors' minds. Are we too reliant on the idea of rate cuts right now?
So how does all of this speak to what I will call an explosion, a re-explosion of options activity that we have seen in the market, and which is arguably contributing to outsized moves in both directions for stocks, for example, on the heels of earnings?
Yeah, well, Morgan, this is one of the things, the longtime option traders like myself always dreamed of, was this kind of volume. But what we've seen a lot of it is in a very speculative character. I've actually been calling it Fomo insurance, where we see a lot of customers buying upside. They may not want to buy, let's say, an NVIDIA at $900. They may not want to put more money into the market in a big way, at all-time highs, but they certainly don't want to miss the performance. I'm speaking more of institutions, but it applies to individuals as well. And so I call this Fomo insurance. The options market exists primarily as a risk hedging mechanism. In this case, the risk that is primarily being hedged is FOMO, is the upside insurance. And so it can exacerbate moves, though, because we're seeing so much activity in short-term options. It's sort of like when you're on a sightseeing boat and everybody rushes to one side or the other. That definitely has an effect right now because of the option activity.
So is that a reflection more of euphoria in the market, or is it more of a reflection of uncertainty? And I guess just as importantly then, as an investor watching this, as a trader watching this, how do you play this to the best of your ability?
Well, I do think it shows a bit more euphoria because we're not really seeing much demand for downside hedges. That has always been, they've always been much more expensive than upside hedges, but lately that premium has really changed. That's why I looked at it this way. One of the things that you just had up on the Chiron was, think about using insurance for options. There were stories that it's never been more expensive to insure your home. Well, it's rarely been this cheap to insure your portfolio. And so this would be a time where if you're getting nervous, if you're starting to think about the sell in May, go away idea, you have a month to start to build up some of your hedges and sort of lighten up your risk tolerance as we go into earnings season and then sort of the end of the November to April historically seasonal great period.